Hey guys, welcome back to another video on today's market movement. So today I'm going to share with you guys mainly some stocks that actually dropped a lot over the past few days. And one of it was actually Trade Desk. So you can see now here with this summary report over here, we can see that Trade Desk, which is ticker symbol TTD, Trade Desk Incorporation, stock price is $127.82. Traders have a confidence rating of 7.2 with 17 analyst coverage, and with all the financial models and their coverage, we actually determine an intrinsic value of $108.20. Now, Trade Desk does not give out dividend and you only have assets of 8.77. Now, this explains why there's a PE ratio of 102 and the PEG of 3.4 and also a price to book of 19.09. Trade Desk, however, does have positive earnings of 2.07, and in case you guys don't know what Trade Desk is actually a technological company that provides self-service omni-channel software, which is marketing, for clients to actually purchase and manage data-driven digital advertising campaigns. Alright, so it's actually a marketing-oriented company that, maybe more like a software program company that actually enables marketers to perform better in terms of their omni-channel marketing campaigns. Alright, so like example over here, it allows clients to manage, integrate various campaigns such as advertising channels, formats, videos, audio, narratives, social, and a lot of other stuff, and it's enabling a lot of things for both the clients and the consumer. So from this, you can tell that this company is actually a B2B company more than a B2C company. Alright, so you can see software sector is software. Anyway, Trade Desk actually have a market cap of 9.96 with a rather decent moat around 3.5, so it's actually a rather decent moat. Actually, you ask me how do I derive this mode? Well, this is actually derived by artificial intelligence. So I actually implant some AI into this shit, and then it basically helped me determine all of this. Financial health is very good, leverage and liquidity is very good, profitability is very good, except for the valuation because it's quite overvalued. Now, if you take a look at the short term one, you can see there's actually some typo over here. Yep, there's actually some conditioning formatting wrong over here, but you can see that gross profit margin is 76.2%. The operating margins is poor because we're looking for 20%. It's actually slightly under 20%, but I guess that's alright because end of the day, why? The net profit margin is 17.4%. Now, this is actually a difference of just 2%. Alright, on top of it, we actually see first we see a year-over-year increase in earnings per share of 59.92%, means every single year, the company is growing at around 59.92%, and on a quarter-over-quarter basis, this company is increasing on a 35.9%, alright? So it's just insane. Return of equity, return of assets is just exactly how we want it. We also see that revenue performance, alright, the revenue performance quarter over quarter is actually 42.4%, alright, 42.4%. That's actually a very, very good performance, meaning that over the years, people actually want Trade Desk products and services, and that's why the demand is there. Alright, so with that said, interest coverage is 69.22. Wow, that is just ridiculously high, man. Alright, so anyway, when you take a look at it, Trade Desk actually went up a lot over the past 1 year. You can see the year-to-date performance. It went up actually 82.41%. So in the start of this year, you actually bought Trade Desk $100. Actually went all the way up to $300 and came back down. Currently is at sitting at $216.46. Alright, so we can see that the short-term support point is actually 195.4, which is I think somewhere around this line. Should be around here because now here will be 190 and then it will be this line 195.04. This is actually the exponential moving average, the simple moving average, 200 simple moving average, and then we set a short-term resistance point of 229. 229 I guess is somewhere over here. Alright, so you can see that you can see that if you draw an imaginary line over here, can you see that? It's actually a potential support slash resistance point over here. Alright, that's why all these are actually determined by the artificial intelligence. If you do not understand anything about technical analysis, you don't have to worry about. You can see overall the strength of the trend is still to sell lah, but it's getting weaker, right? It's getting weaker, so you can maybe look to make a small little position, provided if it actually breaks above this support slash this resistance point over here. Alright, so when you take a look at the current market movement, you can see that the market is actually currently down. It got downgraded quite a lot. Yeah, it got downgraded quite a lot in the past few months, and that's probably the reason. Since 12th June, let's look at 12th June, it got downgraded ever since here, but it got higher, and now it really went lower because lately the market went lower for all these companies, and that's why I'm doing this webinar. Also, you can see that maybe 1 month ago it was overweight, 3 months ago it was overweight, and currently it is still overweight. Alright, so this company currently is actually one good company that you can look at in terms of high growth company, with a up to year to date performance of 82.41%. Now obviously this company will be way overvalued. Another company that I like to highlight is Shopify. Sorry, let me just type this over here. SHOP. So you just need to type in the sticker symbol, maybe just wait a couple of seconds and let it load by itself. Alright, so Shopify is actually a e-commerce company, a software company that enables e-commerce to happen. So so it's actually a e-commerce, a cloud-based multi-channel commerce platform for small and medium enterprises to start businesses and do drop shipping from AliExpress all over the world. So it actually provides it's like a competitor of Wix, if you guys know what is Wix, and they actually provide a lot of premium functions that at a very, very affordable price. Alright, so people can really can start a business from their home. Alright, so you can see that currently Shopify confidence rating of 6.1, analyst coverage of 28 analyst coverage plus all the financial models like PE, PG, etc., with a $218.65 intrinsic value price tag. Current dividend is this, asset is 15.5. You can see that on this hand we see a better moat, however we see a less favorable financials. Alright, so when we look at it, we can see that again, there's actually some typo over here, some color issue over here, but it's alright. You can see overall, you can see that gross profit margin up 55%, operating margin is negative, everything is negative here. Doesn't look like a best company ever. But the thing is that in terms of the year-to-date performance, is actually up 151%. Alright, so this is obviously 100% not a value buy, not a company whereby you were actually going for the value, for the fundamentals, but a company you're going for the high growth opportunity. Alright, so currently we see a sell with also the same thing, the weaker sell over here, potentially looking at a rebound upwards. So short-term support point is around $313.66. So $313 around here. Can you see? Can you just draw the imaginary line again, sideways, horizontal imaginary line? Yep. So you can draw it. Then you can see a very obvious short-term support point, a short-term resistance point of $377, which is along this line over here, this imaginary line over here. Alright, so this is your short-term support slash resistance point. Currently, Shopify is actually reiterated, downgraded a few times and reiterated by Rosenblatt. So right now, the average analyst coverage is overweight, and you see companies which are competitors actually quite similar towards the trade desk. Alright, so it's actually quite similar to them. And I guess I've come to the end of today's two stock analysis. Hope you guys actually found some knowledge, found some opportunity in this stock. I'm not saying it's a buy or sell recommendation. I'm just looking at a high growth company that's on a discount right now, and I mean, you can actually potentially look to load one or two shares because it's quite expensive. I don't deny these stocks are actually very, very expensive in terms of price and in terms of valuation, right? So I mean, if you guys are just trying to capture some potential growth upside, all right, growth upside, then these are companies which I feel has very, very high growth opportunities. All right, so once again, thank you very much for joining and staying all the way to the end. I'm Yongik and I'll see you next time. Bye bye.